So we took a conscious decision not to increase the rates of individual borrowers because that will lead to more delinquency because their high interest regime, their purchase power goes down. In our case, I think we have a very minimum exposure to ISPs. So in that sense, we have no pressure from these haircuts at all. So our capital is well preserved. When you think about People's Bank as a state bank, the first thing that comes into your mind is the affordability and accessibility.
With inflation ending a period of low rates, how will state-controlled banks approach growth? Hello, you're with Echelon's Rocketship Experience, and in the studio with us today is the Chief Executive of Sri Lanka's second largest bank by assets and Sri Lanka's largest bank in terms of reach and customer numbers, Mr. Ranjith Kodituwakku, who's the Chief Executive Officer of People's Bank. Good to have you here, Mr. Kodituwakku.
Same here, Shamindra.
Let me start with the background question. And Sri Lanka is in a fairly challenging economic period currently. It's affected many industries. It's affected life of people. People have been challenged. How has the current economic condition challenged banking? Has it changed banking in some ways?
Yes, Shamindra, actually, definitely, because as we all know, we are going through a financial crisis. So we've seen the biggest ever financial crisis in the history, Sri Lanka right now, which is going through it. And if you talk about the macroeconomic factors, you see that our country was downgraded starting from 2018, I think about 6-7 times.
Yes.
And in this May this year, it was downgraded by Fitch to restricted default.
Sure.
And then subsequently recently, maybe last month, September, the Standard & Poor downgraded Sri Lanka to a default country. So if you look at the macroeconomy, we've seen that in the first quarter, our GDP declined by 4.8%, and it is projected to be declined by 8.4% towards the end of the year. And on the other hand, inflation is I would say at the peak. The CCPI headline inflation is just shy of 70% as of the end of September, and also the food inflation is also almost 94.99%. On the other hand, if you look at the unemployment, it's at 4.5%, which is somewhat improved compared to last year. I think because last year it was also a challenge because of the COVID and lockdowns. But it's improved, but still it's on the high side. So on this backdrop, I think the banking industry is challenged as well.
Do you recall at any point in your history in banking such high interest rates and such challenging circumstances?
Never I've been working in this bank for the last 4 decades. I think I've never seen such high interest rates in the industry. And somewhere in 80s, I can remember, the interest rates went up to 20%, somewhere in the range of 20%. And then again, somewhere in 2006 or 7, the rates went up to about 20% in the banking industry. But this is the highest ever interest rates we have seen in the past.
How does a bank, which is very sensitive to interest rates, because your customers are sensitive to interest rates, and also determines the demand for credit, etc., right? You cannot make vast adjustments overnight just because risk-free rates are adjusted. How is a bank navigating this? How is your bank navigating?
Well, it's really challenging, when it comes to liabilities, though, that means our deposits are getting repriced quickly because people grab the opportunity of high interest rates. Even the customers who used to have their deposits in savings accounts are now converting their deposits to fixed deposits because the rates are very attractive from their depositors' point of view. But on the other hand, we can see that the borrowing customers find it a challenge to service their debts when the rates are high. But the repricing of the asset base, that is our lending book, is not taking place as fast as the liability side. That is for good reasons.
Which is the deposit base. Liability side is
deposit base. For good reason, because most of the loans we've given in the low interest rate regime was below, I mean, they are single digit loans.
Sure.
Because there was not long ago, before March of this year, the interest rates are very low, and we used to lend at single digits. And our loan book, I think in the most of the banks it could be the same, maybe around single digit. And but when you come to when you look at the business sector, of course, price them at variable rates based on AWPLR. So they start feeling the pressure in the first place. Because with the adjustment of the interest rates upwards, definitely the AWPLR goes up, and that will definitely add pressure on the borrower to service their facilities.
So, in one way, your immediate challenge is how do you reprice your assets? Because your liabilities have repriced, or your deposit base has become higher cost. Whereas your loan book is not following suit. Is it fair to think that this is your biggest immediate short-term challenge?
It is actually. As a bank, I think different banks may adopt different strategies, but as a state bank, first we look at this problem from two angles.
Okay.
First is how we are going to handle our retail customer base, because most of the retail customers are fixed salary earners. So if we try to increase the interest rates with the current increased trend of interest, they might not be able to service their loans. So we took a conscious decision not to increase the rates of individual borrowers, because that will lead to more delinquency, because they are in a high interest regime, their purchase power goes down.
Sure.
With other macroeconomic factors like inflation has gone up, maybe disposable income has come down. So with all those factors, their ability to service loans might not be easy. So we kept aside the retail loan book, and we tried and we looked at the other loan books, which is towards the business sector, SME, the corporate sector, where there were two type of loans granted to them. One is the fixed interest rates, and the other one is the variable. The variable, of course, are getting automatically repriced, so we don't have to worry about it. The worry is whether they can service those loans as they used to do it.
At those high rates.
High rates, that's a challenge. But on the fixed rates, of course, we've increased, but not to the level, not on par with the market rates, but at a lesser rate, so that they'll be able to service those loans.
So I'm asking you to now step back, Mr. Kodituwakku, because as CEO, you are the steward. You have stewardship for the long term of this bank, and its capital formation would be, one of those things that you have to think about. If you want to maintain a healthy balance sheet, you have to be profitable and generate new capital. How does one balance the short term versus the long-term need of people's bank?
Yeah, it's a good question actually. Now, if you look at the long term, I think these high interest rates will not be there for a long term. So our view is, or the everybody's view is that this should come down, and it will come down. But when is a question. But we think these high interest rates will prevail in the near term. So right now, if you look at our balance sheet and the profitability, we are more focused on liquidity management rather than profitability, because profitability is not the priority at this point of time. We have enough capital base, and also we've had good profits during the past few years, where we can set off some of our profits to give some concession to the customers. So in that sense, in the short run, yes, we are ready to take losses, but in the long term, we think that the interest rate should go down, because the central bank and the government is taking necessary measures to do that with their right macroeconomic policies, which have been implemented right now. We see the inflation rate tapering off, and corresponding interest rates might also go down accordingly. Not very fast, but with that, in the long run, of course, I guess that we'll be able to see the profits coming in. And we don't want to milk our customers and see that short-term profits, because it leads to short-term myopia, which we try to avoid, and see how best we can navigate the bank through this crisis time for the benefit of the economy and the country at large.
So one of your big customers is are state-owned enterprises. So your shareholder is the government, and your big customers are also state-owned enterprises. Surely this must be fairly profitable business to do. But this is also where your liquidity challenges are probably coming from because of your balance sheet, the way your balance sheet is currently structured. Is it?
It is, but I would say it's not as profitable as you suggest.
Okay.
Because when it comes to state sector lending, most of the time the interest rates are not determined by the bank itself. They are mostly they are subsidized interest.
Okay.
But I feel that the state sector, when you give preferential rates to the state sector, it ultimately benefits the entire society. For example, just think of fuel imports. If our if their cost of borrowing is lower than the market rates, then of course ultimately the customers will be benefited. Similarly, whatever the other enterprises SOEs, when you finance them, I see that most of the time the rates are lower than the rates we mostly quote to the private sector. So in that sense, we don't see that the state sector is that profitable.
Sure.
But still we have some certain profits. I would say it's not unprofitable at all. But then again, ultimate objective is financing the state sector is to see that the economy is run smoothly.
Sure. Mr. Kodituwakku, as we speak, Sri Lanka is also appearing to be pursuing a fairly ambitious state sector restructuring program. State-owned enterprises, departments, how the fundamental questions of should the state be in business are being asked currently. Now you have a balance sheet that is, I think, majority of which is the assets in the balance sheet, a majority of which are state sector loans to the government or government-owned enterprises. How, if these reforms, result in a smaller role for the state in the economy, how do you navigate a balance sheet? Your balance sheet is very large. You cannot just flip a switch and change it. What is your strategy going to be with the balance sheet?
Yes, actually, we've now with this current crisis, which we've seen coming actually. So we took proactive measures to see how best we can control our exposure to the SOE sector, and knowing the fact that there's a high vulnerability.
Sure.
As I said before, the most of the SOE enterprises, state-owned enterprises, are not making profits. Some are bleeding. So we've put in certain caps, portfolio caps, individually and collectively on the state sector. That is one way of looking at how we restructure our asset side. On top of that, I know that there's a government initiative to restructure and bring capital from outside to support the SOEs as well. That will help us to a certain extent, not in the short term, but in the long run. In our process of restructuring the asset base of SOEs.
Right. How will the bank itself, how will People's Bank itself approach its future capital requirements? Is tapping the market an option?
Yes, of course, because in the past our capital was even now the 100% of our capital is given by the government, the treasury. Only a small percentage, maybe 1% or so, has come from cooperative societies.
Yeah.
But if our total capital, it has two tiers, tier 1 and tier 2. So tier 1 capital has been augmented over the years by retained profits.
Sure.
And also recently we issued a perpetual debenture of 5 billion, which was fully subscribed last year. So with that also we could enhance our capital as well.
That is tier 1.
That is AT1 capital, perpetual bonds. And also to augment our tier 2 capital, we issued bonds in two times. So that is in that way, of course, I think we can increase our capital base. So though it is government owned, there are ways and means we can enhance our capital base through through the market.
Do you envisage growing your asset book, your balance sheet, and what are those options currently? Borrowing money is prohibitively expensive, and you really don't want to, I suppose, be caught out borrowing at a high rate now when you anticipate your forecast is that rates will come down. So how does one balance these requirement to grow at the same time the cost of capital being so high?
Good question, Shamendra. What I feel is now, if you look at the banking industry in Sri Lanka, we have the highest capital base in the country, in the banks. So currently, our tier 2 capital is 15.5% as at third quarter of September. Even tier 1 capital is well about 12.5%. It's a very strong position.
Way above the regulatory
requirement as well as above the industry averages. And also, if you look at the pressure points on the capital, it stems from two areas. One is the delinquencies, so the NPLs and the provisioning. Of course, given the current economic crisis, there tend to be more stage 3 loans where the banks are supposed to make more provisions, which will ultimately impact the tier 1 capital. Sure. That is one reason. The other one is we've seen that the government is talking about debt restructuring, especially ISBs, where all the bankers and the investors expect a certain haircut. Percentage are yet to be decided, but the expectation is it could be about 30%. That's a general expectation. In our case, I think we have a very minimum exposure to ISPs. So in that sense, we have no pressure from these haircuts at all. So our capital is well preserved. It's a matter of the delinquencies or the NPLs and how it is going to impact our the capital base. Now, if you look at the industry, last year the stage 3 loans as a percentage of the total loan book was about 5%. Now, the first quarter in this year, it has increased to 10%.
This is industry-wide?
Industry-wide. And the expectation is, or the project, they project these stage 3 loans to go up to about 15% under the current economic crisis. So in that sense, all the banks will have to think how they are going to augment their capital base and get ready to face these challenges. So
you're remarkably lucky, I suppose, that you don't have international sovereign bonds or the foreign currency debt issued by the Sri Lankan government, because we are talking about haircuts certainly in excess of 30%. Some are saying 40-45%, right? We don't know the number yet. But on the other hand, there is also discussion that even the locally issued debt may require some sort of restructuring. So that is one aspect of it. And the second aspect is that state-owned enterprises may require to be restructured, and their debt then subsequently requires to be restructured. What are your expectations on these two fronts, Mr. Kodituwakku?
Yes, if you look at the first one, the local debt restructuring, now I think you have to look at from the investor's point of view. This is actually lobbied by the international investors. Sure. So the argument is, if you are going to have a haircut on our debts, why don't you have a haircut on your local debts as well? Sure. And it could be a recommendation of our consultants as well. I'm not pretty sure about it. But if you look at the international investor, now they consciously decided to invest in Sri Lanka. So it was a conscious decision to take a risk when you invest in international sovereign bonds. So you are trying to draw a parallel with international sovereign bonds and local bonds. I don't think it's a mistake, because in Sri Lanka the banks have no other option. But for your liquidity purposes, you have to invest your money in the central bank, in treasury bills or bonds. So we have no other option. Sure. We have no any other option to go anywhere in the world and have our liquidity requirements. In that sense, I think as a banker, I would say it's an unfair request from the international investors. On the other hand, if you look at the entire the banking industry, the exposure of the banking industry to the treasury bonds, it's almost 5 trillion. It's about 4.9 trillion rupees. Assume there's a haircut of 20% on this 4.9 trillion exposure to the treasury bonds. I think about 1 trillion of capital will be, 1 trillion of money will be wiped out from the banking system, which will have dire effects on the capital basis of Sri Lanka, which you can't afford actually. Because as a country, you can't isolate the economy and the banking segment.
Sure.
So if you have to have a thriving economy, even to revive the economy from this crisis situation, we must have a resilient banking industry. So can you kill the banking industry and revive the economy? So that's the challenge you have in our hand right now. So I think that is very unlikely. From the government side or the central bank side, they will take such a drastic decision. Even if they take such a drastic decision, I would say there should be some sort of a helping hand to the banking sector in Sri Lanka if you have to take that decision, because it's inevitable that most of the banks will collapse in an event like that.
So the central bank has, I think, agreed in principle that some level of recapitalization may be required for the Sri Lankan banks. What do you think? What shape or form should such a recapitalization take? What are the criteria?
I think it can come in different ways. Basically, the stress is on tier 1 capital. So for tier 1 capital augmentation, there are so many ways and means. I'm talking about the entire banking industry, not particularly about People's Bank. So you can, maybe you can go for a share issue. I don't know, it's the right time, because if you look at the market capitalization right now, the rates, the share prices are trading at really low rates. And when there are lucrative rates in the banking industry for the deposits, even if you go for a like debenture issue, we have to offer high rates of interest to get those debentures. Get funding. But it's basically maybe you can amongst many other options like debenture issues, issuing shares. Maybe you can offer a merger or even acquisition to strengthen your capital or the capital base. But then again, there's a question: it is the right time, because we are going through a crisis. Whether we should, whether we can acquire or merge with a bank where it is equally weak. So which might, you are asking for sometimes maybe for problem. You are trying to merge with a bank where their balance sheet also threatened. So what I feel is it is better. Until some sort of a consolidation is reached.
Let me now ask you to really step back. We've been discussing throughout the impacts of the current crisis on your balance sheet and how you're going to strategize and navigate your balance sheet, right? This is the most important thing for you. I'm sure it takes up much of your time every day. Let me now start asking you about how this is impacting your customers, and in the future, if People's Bank's asset book is going to grow because it will engage more individual borrowers and small businesses, what should be your strategy going forward in that area?
Yes, actually now in the near terms, we are not looking at the balance sheet growth. Because it's a turmoil time, very uncertain, and a lot of pressure in the market. So what we are looking at more or less stability of the bank and consolidation. So, but in the meantime, we want to help our customers as well. So what we do is make sure that our depositors have the confidence in the bank. So the priority is to safeguard the deposits of the customer. So that is where the liquidity management is important, and also the capital augmenting the capital base. On the other hand, we can't just ignore the borrowing customer as well. So what we have adopted right now is try and support them in short-term financing. We never advise them to go for long-term investments, because the market is not that conducive for such initiatives. So to come out of their temporary cash shortages, we are ready to help them with short-term facilities. And on top of that, there are certain funding lines we've got from different agencies at low interest rates. So nowadays we are promoting those loan facilities where still the borrowing cost is
much lower than
in the market. So that's the short-term strategy. But going forward, our expectation, the market conditions is stabilized, and then the rates will go down and the inflation will go down, and once it settle down at a certain level, maybe we can open our loan book and see how we can start thinking growing and helping our customers.
I suppose there isn't a lot of demand for new loans from SMEs and individual borrowers currently versus what it was several years ago.
Definitely, because in the current interest regime, it's difficult for a business to borrow at high costs and then service it. But when you might think that if you isolate interest only, one might think that it is very high. But if you look at the entire the economy, the interest is a factor that controls inflation, which in turn will stabilize the prices in the market. So for an industry or any other business, there are so many inputs. Interest is only one factor. So with the current macroeconomic policies adopted by the central bank, I think though the rates are very high, we've seen that the stability is slowly setting in. So with that, the rates will go down, the inflation will go down, and that is the expectation. And then all the businesses might be able to get to their usual rhythm of doing their business, I guess.
Let me ask you this as the final question. There were some founding principles of People's Bank, right? People's Bank was founded, correct me if I'm wrong, 60 years ago.
Yes, 61 years now.
61 years now. It was, in that time when it was founded, there was no other bank like it serving the rural masses of Sri Lanka. How do you reinvent the bank for the future? How is not just the current crisis, but how is Sri Lanka's economic trajectory likely to change the bank?
Yeah, in fact, though today we are a large commercial bank, we have not forgotten our founding objectives. As you rightly said, the bank was established in 1961 to cater to the rural masses. While keeping our founding objectives intact, we have grown to today's status, being the second largest bank in the country, with about 743 branches all over the country. And now we are a technologically very advanced bank. You can see it all over the country. We have our self-banking booths, and our digital capabilities are parallel. But when you think about People's Bank as a state bank, the first thing that comes into your mind is the affordability and accessibility. So that is still true if you compare with the other banks, but we want to take it to another further ahead and see that customers are served efficiently, and also we want to see that they have a enhanced and increased customer experience while doing banking with People's Bank. So our objective going forward is, of course, we are a commercial bank. We want to see that our bank is growing steadily. And also, while growing, we want to see that being a state bank, we should contribute to the growth of the economy as well. Though as a bank, we need to make profits because for continuous growth. And for outsiders, it's a matter of how you grow your business, how you grow your balance sheet, how you grow your profits, how you augment your capital base, and improve keeping your Basel III standards. So those things have to be complied with. Otherwise, we in the international market we might be marginalized. So while keeping these objectives intact, we also try to serve the general masses. And at an affordable cost, like I said, and also to support the economic the growth of the country as well, in line with the government's objectives.
Affordability and accessibility, and those values remain true even in the future.
Yeah,
even now.
Yes.
Right. That's a wonderful way of describing it. In conclusion, Mr. Kodituwakku, anything you want to add?
Well, I think People's has been there for over 61 years, and we've gone through a lot of challenges during the past, and but we've grown immensely. Starting with a small capital and a few branches, starting in Colombo, first branches in Colombo, then all in outside rural areas. We have come to a point where today we are a giant in the banking industry. We've gone through many economic challenges, but we've been very resilient. And our strength is with our customers, actually. Whatever the problems are there, I think they've stood with us, and I'm pretty sure that customers will remain with us going forward as well, which will help us to navigate through any crisis. I think even this financial crisis is, though it looks very challenging from our point of view, because we are the people who are managing it. I think from our customers' point of view, they are always with us, and their support, of course, will definitely help us to navigate through this crisis and be resilient, and a bank which is supporting our customers as well as the entire mass and the economy at large. So my request is to be with us and enjoy whatever the facilities we are offering to our customers.
Mr. Ranjith Kodituwakku, thank you for joining Echelon's Rocketship Experience.
Thank you, Shamindra. Thank you very much.